Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
All right. Happy Monday for Abercrombie & Fitch investors, up 235% from year-ago levels. This is a pretty big story, Andy, with the stock just about $30 off of all-time highs. But this has just been a massive winner. Do you have data that kind of backs up the performance here in the stock?
You know, when I looked at the 2-year chart of Abercrombie stock, I thought I was looking at Nvidia stock. They've gone almost side by side. In fact, Abercrombie has outperformed Nvidia over the last 2 years, if you can believe that. The biggest driver of this is, well, number one, they've had a very successful turnaround, and you got to give credit to the executive team for that. They're also dealing with a lot of tailwinds. Yoga pants and athleisure is out. Denim and dresses are in. Abercrombie's in the denim and dresses game in a very big way and delivering to consumers in a way that they really approve of. When we look at Likefolio data for Abercrombie, it's extremely strong on all fronts. Web visits are up very nicely. Most importantly, app usage is for the back to school season is almost at holiday levels. We've never seen anything like this before in terms of the back to school season benefiting Abercrombie's brands, and that's clearly happening now. So I think they're going to have a very good story to tell going into earnings. I think they'll continue to have a very good outlook. At this point, the trade is, do you think that a stock that's moved this much higher can keep going higher? Because everything that we have in the Likefolio universe, from the company itself, from the broader trends that we watch in the fashion industry, says that this company is in all the right spots, delivering for its customers and executing at a very high level.
Andy, they had a double beat in Q1. Yeah. They raised their 2024 guidance. This company seems to be surging. You saw, you guys already talked about the chart. There's some worried about freight rate levels and the cost of getting their products, and that could affect their margins. There's a bunch of stories out there. The question is the bar really high? It seems like it's high for this name. That's the first question. And the second one is, why are they doing so much better than, say, Anthropologie and Hollister? What? It seems like, in my old guy eyes, that they're all about the same. Although Abercrombie seems to be the leader in this category, your data shows they're only behind American Eagle. What are you seeing? What differentiates them?
Yeah, look, the bar is very high. The company adjusted earnings growth guidance to 35%. That's a really high number. But at the same time, we've seen with Nvidia, a lot of times when companies are raising guidance, they're actually sandbagging a little bit looking forward. I think Abercrombie may have done that. When we look at the data that we have, they're blowing away what they did last year. They're blowing away what they did in the previous quarter. I think that they're going to be in very good shape in terms of the numbers that they report and the outlook that they give. I don't have any insight into freight rates. If that's a concern for people, then that certainly could be a reality on the ground that we don't spot. But what they're doing better than competitors is actually on the technology side. Like you said, a lot of the clothing, a lot of the fashion trends seem to be very similar, but they have had a very successful launch of what they're calling, I believe it's their wedding shop, which is not for the bride and groom, but for all of those young people that are attending weddings during wedding season. They have a very popular place for people to shop for dresses and outfits there, and that seems to be working really well and getting people into these app ecosystems so that they can continue to market to them very cheaply and very effectively. And so I think the technology side of Abercrombie is really where they're gaining on all of their competitors. They're at 60% of their sales are e-commerce at this point, something that we thought, just 2 or 3 years ago, we thought Abercrombie would never be able to compete in e-commerce, and here they are dominating.
Yeah, the strategic investments, trying to redo their Hollister brand that's under their umbrella, good. But Andy, if you look at the fast casual trend that's been taking hold, whether it's Temu or Shein or H&M, you've got Amazon trying to get into that. Is that sparking more demand because everybody wants to change their outfit every month? But Abercrombie's taking advantage of it because they've got the higher gross margin, they've got the higher price point, and maybe the better mix here from domestic-based retail sales?
Yeah, I think that that's part of it. I also think that Abercrombie's just benefiting from a overall fashion trend shift. Look, I'm not anywhere near a fashion expert, but we do get really good data on what the trends are, and denim and dresses are definitely coming back, and Abercrombie is great at both of those. And so, they had headwinds of athleisure and yoga pants or whatever you want to call those for a long time. But now the winds have shifted. They've got a tailwind at their back, and they've got the technology to capitalize on it.
All right, Andy. Like I said, only $30 off its all-time high, still up 88% this year. Are you guys still positive as far as your earnings score on this one?
Yeah, this is one of those where it's really tough because you really feel like you're going out on a limb, but all of our data is so positive. We think that they're going to have a phenomenal outlook. Yes, there are potential landmines in there like freight costs and everything like that, but from a delivery to consumer perspective, they're doing a phenomenal job. We think the outlook's going to be great, and we think that the stock could power higher from here.
All right, great stuff, great data as always, Andy. Appreciate it.